Eric Mwathe for the weekend of September 20th and September 21st, 2014. Let's take a look at markets, how they traded on Friday. The Dow up slightly, Nasdaq was down 0.3%, S&P 500 was unchanged, gold was down 1%, crude oil was down 0.67, and we see that the VIX was up very slightly. Let's take a look at the markets trading action for the week. We see that the S&P 500 was up 1.25%. One thing I want to point out here is that on this chart you can see that it's a fresh weekly closing high, and so above the previous weekly closing high, which we can use for a gauge in terms of market health short term. So anything above 2007.71 should indicate a healthy market, so keep note of that number. Anything above that is above the previous weekly closing high, suggesting that the market should continue moving higher. On the S&P 500, there's this declining RSI top lines there that could become a problem. So keep note, that's where the market settled at the end of the week. If it stalls something like that, that's going to confirm negative divergence, which could actually be a reason for the market to pull back. But above 2007.71, the market should continue looking good. S&P 500, and now let's take a look at the Dow. For the week was up 1.72%. It's a fresh all-time weekly closing high. It seems like a crude looking cup and handle formation. You can also see that on the Dow. If you take the tops of the RSI, you can see where it's settling at the end of the week, exactly around the line. So if it can hold above that line, the market should do good. Otherwise, if it stalls and has a reversal, then suggesting that the market could actually see a pullback. For the week, the Nasdaq was up only 0.27%, lagging slightly, and you can see it has not moved above that 69.10 threshold. Maybe that's why it's struggling. Also, you notice that it's been struggling at this level here ever since this break, which was this break there and this most recent pullback. So it seems like we've come back to that general area, but we are stalling in terms of the RSI. If we continue stalling and we roll over, I would start thinking that maybe short term this market actually wants to look and go down. But for now, watch that level on the weekly. Anything above 69.10 could suggest the market is back in full force, just like it did here when it moved above 69.10. Stayed above that level generally until this period, so you had a nice run from here all the way to here, just mainly because of that technical observation of the market holding above 69.10. So let's go to the annotated charts. We begin by taking a look at the Nasdaq weekly, and it continues holding above the previous weekly closing high of 4485.93. So there's a good market. Seems like right now, over the last couple of days, it's been stalling. Actually, going back about 3 weeks, it's been stalling around 4600, and actually you can see that very easily if you take a look at the short term. Let's take a look at the 30-minute chart for the Nasdaq, and you see that this was the previous intraday high, and today's morning action came back to that same level, tagged it, and reversed. So maybe there's something here that eventually is gonna kill the recent uptrend. You go to the Nasdaq daily, and you can see again, you can just draw a line around 4600. Market's been trading and finding resistance around that level. So of course, if we break out there, then you have to assume the market has free reign to move higher. The one thing I can note here is, let's not make light of the fact that we've been making higher highs here, and yet during that period the technicals made a lower low, and since then we haven't really made new highs on the Nasdaq. So maybe it's a response of the fact that we are running out of momentum on the strength part of the market, and so yes, we are staying around the current levels, but the momentum has yet to actually be in sync with the price advance. So maybe eventually, if that's the case, this market could actually pull back. Also, take note of the Nasdaq Hourly. This here was an morning gap up. That was the intraday high at the gap up that day there, early September. And so it's just come back to that same level and tagged it on the hourly chart and stalled. Also, you can see that this is the previous high came here, which is somewhere around there, and so the RSI is rejecting the market at the same level. So a pullback would make sense, and as of right now we are seeing a pullback taking place. So maybe as a response of those two factors, you got lower strength on the RSI while the market is making higher highs on the price, or at least attempting to make a higher high and failing. So that could be the reason why we had that pullback throughout most of the day for the Nasdaq. Is it broken? No, of course it's not broken. If you take a look at the Dow, just remember that on the weekly, this is the top side of the weekly RSI. If it stalls at that level, I would actually look at this market as being due for a much needed rest. On the Dow daily, so very nice breakout after a nice wedge type formation here, consolidation, and finally the market broke out there. So nice action, and it's holding above that. Problem now comes to, if you take the highs of the daily RSI, and you can see that it is around that level. Also back test of the previous breakpoint. Now that breakpoint here happens to be this break before this plunge, and so we are back testing that. So a little bit busy on that chart, but I'll show you a clean view. And here's a clean view for the Dow daily. You just need to draw a straight line from connecting the highs. So that connects that high, this high, touching that high, and we are trading there. If that becomes resistance, you'd expect a pullback, and the back test was this line here. And so let me take that off. So a clean view, so you can see the back test could come in play right there. So we've found resistance once before, short term, which was this high, and then we went and formed this wedge there, and so this could also become resistance. That's what I'm trying to explain there. All right, take a look at the Dow Hourly, see what we get. So on the Dow Hourly, notice a couple things. If you take the trend, the price channel, just connect the line like that, you can see that it broke down there, and ever since this break, the market has come back, found resistance on the line, come back, trading at the resistance of this line. So the previous channel backtest seems to be taking place there. Could that be a reason for the market to stall? I think so. Why not? It's possible. So we'll see what happens. And you can draw the same line at slightly different, just connecting these lows through those lows, and same type analysis. You see that this is a backtest. Ever since we broke down below the line there, this has turned into resistance. Is that enough to stop the market? We'll see. If you take a look at the transports weekly, and you can see closing at highs here incrementally. The technicals haven't necessarily made new highs, but they're okay, and we did not capture the area above 69.10, so we'll see what happens. If it can move above 69.10, that's good. If not, then this becomes resistance. And the reason why I say it could become resistance is because on the daily for the Dow transports, you'll see that if you take the highs on the RSI, this has turned into double top resistance. So yes, we are making higher highs, but we are making lower lows on the technicals, which could be a problem. If you take a look at the transports, also on the hourly for the transports, there's also similar type formation on the hourly, higher highs, lower technicals. So that could be a problem again on the transports. S&P 500 weekly, you see here, to me this seems like some type of resistance on the top side of the weekly RSI, because we are making incremental higher highs and yet technicals are not moving higher. If you take a look at the daily for the SPX, so even though we are making higher highs on the S&P 500, you can see that we seem to be making lower lows on the technicals. Also take note of the fact that we made a higher high as of Thursday's close, but the RSI is very close to 61.8. So if this turns out to be negative divergence and looks like that, then this is classified as the worst type of negative divergence, because you're making a higher high and the technicals are stalling at 61.8. So just keep note of that. Anything above that, if it can gather enough energy to break out above that, then you have to really conclude that this market has even more upside. Right now, without really adjusting for anything, you can see that this is some type of declining RSI line, which is forming resistance, which might explain why the market did not close at highs on Friday. Let's take a quick look at the Canadian market. And you can see that unlike the US market, down for the week 1.71%, it's a huge drop. We seem to have broken this previous trend line there. It's not necessarily out of possibility of bouncing, but seems to be broke that trend line. It's off 69.1. Also, if you go back to the previous analysis, we had talked about, just like the S&P 500, it was making higher highs, but the technicals were making lower lows. So we have to be aware that it looks like maybe this is leadership on the way down, maybe it's not. To just keep that in mind. Also, there's a short-term break of that trend line. This could lead to lower action. It's trading below the 50-day moving average, not materially broken, but maybe this is just where things start turning around. The one thing also I have to note is that be very careful about calling this a dead market, because on the daily for the Canadian market, I noticed that over the last couple of years it's been bouncing around this level on the RSI. So you just draw a simple line on the RSI, and this line here, once we moved above this level, was the perfect entry level, which was this lows. And every time we've come back to the line with uniform activity, the market has bounced. Double bottom, uniform activity, market bounced. Double bottom here, market bounced. We came here, market bounced. And so guess what? We are back there. So just be careful that yes, it's pulling back, but does it mean it's dead? Not necessarily. If it bounces from here, maybe it's still healthy. Take a look at the monthly. You can see it continues holding above 69.10, and that means it can bounce. So watch that Canadian market just to see how it responds. There's also another interpretation of this entry level. Why? Because if you draw a straight line, you can see that this was also short-term entry late last year, and since then it's up. It's test that line, perfect entry level, and now we are back here. All we need to do is have uniform activity back above the line, and this becomes another buy area. So yes, the monthly continues being strong. That's why you have to respect bounce possibility. So when I take a look at, before I go, let me take a look at Apple, which honestly looks okay. The daily, this is the weekly. Apple is still holding above 69.10, which is just sign of strength. The daily continues being good, bouncing off the 50-day moving average recently, and also holding above the 50 level on the daily RSI. So anything above bouncing off the 50, it's been successful. As you can see, ever since this move above the 50, it's been bouncing on the 50 each time successfully. Especially if you're a day trader, this is a nice place to go long. And so we'll see what happens here. On the monthly is above 69.1, hence the reason why it continues being strong. Anything below 69.10, then you start wondering if you're going to get a serious pullback. The last time we moved below 69.1 was here, which was sometime late 2012 before this big drop. Want to leave you with the markets here. Take a look at the SPX monthly and look at where the RSI is trading. All this is just sign of strength. Take a look at the Nasdaq, and you can see that on the Nasdaq monthly it continues holding above 69.10, which is again strength. And also the Dow has recently jumped back above 69.10, and that's why it continues being strong.
This evening, Dow Hourly from